Hello, this is Bizworld with me, Farah, Nabilah, Wazer. Malaysia's Industrial Production Index, IPI, recorded a 3.1% expansion in February, driven by favourable momentum across all sectors. However, it was a slower growth compared to 4.3% in January. Chief Statistician Datuk Seri Muhammad Huzaim Mahidin said the moderation was mainly due to the reduced output growth in the manufacturing sector, which grew 1.2% compared with 3.7% in January. He noted that the rise was supported by domestic-oriented industries, which expanded by 3.8%. Nevertheless, he also mentioned that the mining and electricity sectors accelerated by 8.1% and 10.9% respectively. Fitch Solutions company BMI has revised its end 2024 forecast for the ringgit to 4.55 against the US dollar from 4.4 to account for the local note's performance in the first quarter of the year. The firm stated that it holds a positive view on the ringgit over the medium term, as narrowing yield differentials with the US will bring the local currency back onto a more stable footing. It added that the ringgit had been on a broad weakening trend since the start of the year and touched support at 4.8 against the US dollar in February. Beyond the 6-month horizon, it also expects the ringgit to continue to strengthen, reaching 4.4 against the US dollar by end 2025. Meanwhile, BMI forecasts that Brent crude oil prices will average $85 per barrel in 2024. According to the firm, this will help support Malaysia's exports, given that oil accounts for nearly 20% of the country's outbound shipments. BMI also said the latest figures from the Tourism Ministry showed that total tourist arrivals in 2023 amounted to 20.1 million. While this surpassed the government's upwardly revised target of 19 million, it remained about 77% of pre-pandemic levels. Additionally, BMI forecasts the country's current account surplus to widen from 1.2% of gross domestic product in 2023 to 2.6% in 2024. Local institutions continued their net buying trend for the 6th consecutive week, accumulating a net purchase of 557.4 million ringgit, while the net selling trend for foreign investors has extended into its 6th consecutive week, resulting in a net outflow of 336 million ringgit. According to MIDF research, this extends the net foreign outflow year-to-date to 1.21 billion ringgit. For the 4th consecutive week, local retailers upheld the net selling position on Bursa Malaysia with a net disposal of 221.4 million ringgit. The sectors with the highest net foreign inflows last week were property, construction and healthcare, while the sectors that recorded the highest net foreign outflows were financial services, industrial products and consumer products. Bursa Malaysia closed higher today in line with the regional market indices, which were mostly in the green throughout the day. At 5 p.m, the FBM KLCI increased by 4.73 points to 1,559.98. Gainers outpaced losers with 531 against 511 counters, while 502 counters traded unchanged. According to Bank Muamalat, the US economy is also seen to be on track to reach a soft landing despite the successive interest rate hikes since March 2022. And that's all the time we have for Bizworld. I'm Farah, Nabilah, Wazer. Keep tuning into TV3 and selamat berbuka puasa.